a $134 million gamble, crypto's high-stakes play in the 2024 U.S. elections. The 2024 U.S. elections witnessed an unprecedented influx of money from an unexpected source: the cryptocurrency industry. Crypto firms poured over $134 million into the electoral system, aiming to influence the outcome of elections and shape the future of financial regulation in the United States. This massive investment in political lobbying marked a turning point in the relationship between the crypto industry and the American government. It raised eyebrows, sparked debates, and ultimately forced a reckoning with the growing influence of digital assets on the political landscape. The crypto industry's motivations were clear: to secure a favorable regulatory environment for their burgeoning businesses. With the potential of blockchain technology still being explored, and the value of cryptocurrencies prone to wild fluctuations, companies like Coinbase and Kraken saw an opportunity to shape the rules of the game. By investing heavily in lobbying efforts, they hoped to sway lawmakers in their favor and prevent stifling regulations that could hinder their growth. This influx of crypto money into the political system did not go unnoticed. Critics, including consumer advocacy groups and some lawmakers, voiced concerns about the potential for undue influence. They argued that such large sums of money could distort the democratic process and give crypto companies an unfair advantage in shaping legislation. The debate over the role of money in politics is not new, but the emergence of crypto as a major political force added a new layer of complexity to the issue. The 2024 elections marked a watershed moment, bringing the issue of crypto's influence on politics to the forefront of public discourse. The $134 million spent by the industry was not just about winning elections. It was about shaping the future of financial regulation and securing a prominent place for cryptocurrencies in the global economy. The outcome of this gamble would have far-reaching consequences, not just for the crypto industry, but for the future of finance itself. The Trump administration deregulation and the rise of the crypto lobby. The stage for crypto's political ascent was set during the Trump administration, which ushered in an era of deregulation across various sectors, including finance. President Trump's rhetoric often favored a hands-off approach to government oversight, creating an environment that many crypto entrepreneurs viewed as conducive to innovation and growth. This period also saw a surge in lobbying efforts by the crypto industry, eager to capitalize on the administration's deregulatory zeal. One of the most significant moves of the Trump era was the establishment of the U.S. Crypto Reserve, a controversial initiative that aimed to create a strategic national stockpile of Bitcoin. This move, championed by some within the administration as a way to secure America's financial future, was met with skepticism from others who questioned the wisdom of investing public funds in a volatile and largely unregulated asset class. The Trump administration's deregulatory approach extended to the Securities and Exchange Commission, which saw a decline in enforcement actions against crypto companies. This period also witnessed the dropping of high-profile lawsuits against crypto exchanges Kraken and Coinbase, signaling a more lenient stance towards the industry. These moves were welcomed by crypto advocates but criticized by those who believed that stricter oversight was necessary to protect investors and prevent market manipulation. The Trump years, therefore, created a fertile ground for the crypto industry's political ambitions. The deregulatory environment, coupled with the administration's openness to embracing new technologies, emboldened crypto companies to ramp up their lobbying efforts and seek to shape the regulatory landscape in their favor. This period laid the groundwork for the industry's massive spending in the 2024 elections, as crypto companies sought to maintain their newfound influence and cement their place at the table of power. Biden strikes back a new era of crypto crackdowns. The arrival of the Biden administration in 2024 marked a stark shift in the regulatory landscape for the crypto industry. President Biden, along with Vice President Kamala Harris, adopted a more cautious and skeptical stance towards cryptocurrencies, emphasizing the need for consumer protection and market integrity. This change in tone was accompanied by a series of high-profile crackdowns on crypto companies, sending shockwaves through the industry and signaling an end to the era of regulatory leniency. One of the most significant events of the Biden era was the jailing of Sam Bankman-Fried, the founder of the collapsed crypto exchange FTX, for 25 years. Bankman-Fried's downfall, once hailed as a visionary entrepreneur, served as a stark reminder of the risks associated with the unregulated crypto market and fueled calls for greater oversight. The Biden administration's crackdown extended beyond individual actors to target some of the industry's biggest players. Binance, the world's largest cryptocurrency exchange, was slapped with a staggering $4.3 billion fine for alleged regulatory violations. This move, spearheaded by SEC Chair Gary Gensler, sent a clear message that the Biden administration was serious about reining in the crypto industry and holding companies accountable for their actions. The SEC, under Gensler's leadership, adopted a more aggressive approach to crypto enforcement, initiating numerous investigations and lawsuits against crypto firms. This shift in regulatory posture created a climate of uncertainty and apprehension within the industry, as companies grappled with the implications of a more stringent regulatory environment. The Biden administration's actions marked a turning point in the relationship between the government and the crypto industry, ushering in a new era of heightened scrutiny and enforcement. In the ever-evolving landscape of campaign finance, a new player has emerged, wielding significant influence. With a staggering $40 million at its disposal, this political action committee is making waves and challenging the status quo. How did they amass such a war chest? And what are the implications for our democratic process? Let's dive in and explore. The world of cryptocurrency is often seen as a land of opportunity, but it can also be a treacherous terrain. In this cautionary tale, we delve into the story of a crypto collapse that left investors reeling. What went wrong? And what lessons can we learn to protect ourselves in the future? Stay with us as we uncover the details. As cryptocurrency continues to intersect with politics, questions of public trust inevitably arise. Can we rely on these digital assets to uphold the integrity of our political systems? Or do they pose a risk to the transparency and accountability we hold dear? In this segment, we examine the delicate balance between innovation and public trust. In light of the complexities we've explored, one thing is clear: transparency and accountability are paramount. Whether in campaign finance or the burgeoning crypto market, we must demand openness and responsibility. Only then can we ensure a fair and just system for all. It's a call to action for each of us to stay informed and engaged.